Hello everyone, welcome to my channel. My name is Orlando and we have to jump on this now, guys. So if you've been following my videos, if you've been following the market, you know that everything is down. I mean, everything is down. Stocks, houses, crypto, everything is going down. So what is the cause of this, and why do I think that the housing market in particular is going to feel a crushing effect to everything that's going on? If you've been following the news, you know that the war between Russia and Ukraine has already jumped off and has already started. So what effect will that have on our market in the US? US and other countries are cutting off Russia from exporting one of its biggest money makers, which is petroleum. So how will that affect us? US is saying that we will now use our reserves instead of being dependent on Russian oil. So let's jump into exactly what's happening into this market right now, so you can actually see how the market is reacting to what's going on in the world. It says here, stocks plunge after Russia invades Ukraine. US stocks plummeted Thursday morning along with markets all around the world following Russia's attack on Ukraine. The tech sector is getting hit particularly hard. The NASDAQ plunged into a bear market territory, a more than 20% drop from its all-time highs, guy. A 20% drop. So what do your 401ks look like right now? You know, this is what we're talking about when you have to prepare for the long haul. Guys, if you have something in your 401k, please do not pull the money out. Please do not get scared and think, you know what, I'm gonna pull my money out and put it somewhere else. If you're holding it for the long term, let it run its cycle. It will go back up. We're going through a tough time right now when it comes to stocks and when it comes to almost every sector when it comes to investing. Now let's look at the Dow here. It says the Dow sank 2.5%, more than 830 points on opening bell. Then S&P fell 2.6%, and then the NASDAQ, of course, is down 3.3%. Now remember, guys, we have had a historic run when it comes to making money in the stock market. So a lot of these clawbacks, I will call them, the downturn that's happening now, will it get worse? Of course it will. Of course it will. But you have to let it run its cycle. Do not take the L and pull your money out and accept the loss that you have right now that you may be seeing in your 401k. I don't know how you guys do your 401ks, but normally if the market is down in this fashion, no matter where you are probably seeing some type of loss. So let's go ahead and take a look at some of the other things that we're seeing here. Now, here's another thing that happened back in '08 when I myself was like, man, what's going on? I was fairly new and I went through that first recession. What was the one thing that I knew to do? The one thing I knew to do was to invest in gold. And what is happening with gold right now? Now, if you look at here, it says here, US stock futures tumbled after Russia launched a full-scale attack. US oil rose more than 8% because we're going to start cutting off Russia, like I said earlier, when it comes to the petroleum. It says gold surged 3% to more than $1,970 an ounce, a troy ounce. So once again, we have something where it's an indicator, guys, an indicator showing that back in when we had the recession in '08, to now, the same history is repeating itself. So when gold rose up, what happened to the economy? We had the downturn, and we're going through the same exact cycles. Now, this is a key important part of this video, guys. So let's go ahead, and I got this video from a friend on YouTube. K-Business Podcast posted this earlier today, and this shows what is going on with the housing market, guys. So check this video out.
Everyone, so I am here showing my client a home, and I just want you to take a look at all of the people who are lined up to see this property.
Wow.
So when we say that there is a housing crisis, we really, really mean it. It's absolutely insane. The line goes all the way in the back. It's not even 5:30 fully and someone stopped me and they wanted to know what was going on in the neighborhood. And I just told them the truth. I said, we're having a housing crisis. And this is a home that is priced under $300,000 here in the Raleigh area.
Under 300.
And as you can see, there are just cars upon cars upon cars. And there are a ton of people that are trying to see this home. This is absolutely ridiculous. We have got to get control over these prices and the housing inventory. Absolutely crazy. So, and people are so desperate for a home, you know, under a particular price point because people don't make as much money. But there's there's just a lot of people out here. This is just absolutely insane. Like I said, I had some people pull over while I was walking up to the property just to talk to me about what was going on here. All right, just wanted to share. All right, y'all take care. Have a great night. Bye.
Okay, guys, so we saw this video, right? And so what is this video really showing, right? It's showing that the shortage of inventory that is going on in the marketplace. Now, this is in particular in North Carolina, Raleigh, I believe, North Carolina. And that market in itself, that is a hot market. Charlotte, all of that stuff, it's a coast. And if you watch any of my videos, you hear me say coast properties are expensive. They will be expensive. It is a desired location for people to live. Close to beaches, water, like it's just people love coast. New York, Miami, Houston, LA, any of these coasts, it's just gonna cost you a lot more to live in those areas. Now, she is saying one of the biggest problems is that that house is priced under $300,000, guys. So what does that mean? That means that that's a house here in the Midwest. That is the reason why it is so desirable. That's the reason why there is a line, you know, all the way down the street. It's because people know if they buy that house, they automatically make money. Automatically, the day you close, you could possibly make $50,000, $100,000. That house is priced very under. But here's the thing. The seller knows this. They are making a bidding war happen on that house. That is a tactic that a lot of people are using now, putting houses under market value so you can generate a buzz and then create this eBay type of effect when it comes to buying a house. So here is a really key point that she said in the video. People are not making more money, but the houses are rising. So individuals want to move into that $300,000 house because they can afford it, but once it goes above that $300,000, it's no longer affordable. And this is the reason why we're gonna have an issue, is because I still do believe prices will go up. Inventory is gonna take some time to catch up, but the rental market is going to continue to grow because people's salary will still stay the same. And even though the pricing of a house will go up, people's salary will still stay at a stagnant point, which will make the demand in the rental market, guys. The landlord owning your property, rental property market, that market that I'm trying to get you into, that market right there is going to be extremely profitable. You're gonna have more tenants than you know to do with. You will have that same line wrapped around trying to get into one of your rental units. I can hear you now, Orlando, so how is this going to affect the housing market? And will I be able to get into a house because of a crash? Well, what I believe is going to happen, guys, we are having all of this back and forth with the war, with the prices going down and the stocks and everything like that, but we have yet to see rate increases. When the Fed decides to increase rates, depending on how aggressive they are, we've heard 7, we've heard 9 rate increases. When they check inflation and bring inflation down by raising rates, meaning people with less money can buy less house, right? Because higher interest rates mean less house you can afford because the debt is going to cost more. So what's gonna happen with that is it will be less demand for houses because the money will not be as cheap. Inflation will go down because of that. I think that's gonna make a vacuum type of recession or a vacuum type where people just can't afford houses anymore and the demand will drop. The more people who can't afford homes, that will drop the market. Now, you know, that's just my opinion, guys. That's just my opinion. Don't slaughter me in the comment section. Let's make this a real discussion. I've seen some of you guys in the comment section saying that you believe that there will never, ever be a downturn in the housing market, and there's just no way because the 2008 recession or housing crash was based upon bad loans. And you believe that if there aren't any bad loans, there's no way the housing market can go down. It's impossible. Well, I'm here to tell you it's very possible. And so get ready to watch the roller coaster, guys. But one thing that I do want you guys to have faith in is have patience in the process, in the cycle. Don't make any rash decisions, pulling your money out of the stock market, pulling your money out of whatever it is, and actually holding that L, like I like to call it. Go ahead and understand that these things happen in cycles. And if you would have took your money out in '08 because of how the market was going, you would have not had all of the upside benefit of where we just were, having a historical run on if you invested back then. So the same thing applies to this, especially if you're an individual who has your money in 401ks or any other IRAs, Roths, anything like that. Just keep your money where it is and hold out for the long term. You won't need it until retirement anyway, right? That is the hope. That is the hope. So I hope you guys got value out of this content. I'm gonna need you to watch this next video here. It will help you get into your first rental property and learn all things real estate and financial. I need you guys to check out in the description. We have a membership program. See you guys in the next one. Thanks.